Future Millionaire. It is, what the hell time is it? 11:08 p.m. Eastern Standard Time. Make sure you take a look at the live stream that I shared. It was about an hour and 38, hour and 40 minutes from Twitch. It's already got over 1,000 views in 40 minutes. I can't even believe that. That's fucking incredible. I appreciate the support. And we're gonna watch this real quick from Peter Schiff, and this is a severe. This is his ultimate warning. So pay attention to Peter, and if you're not paying attention, shame on you. Whoever reminded me about my closed captioning being off, I really appreciate that. I turned it on, so as you can see here, it was off like that. So if I turn them off when I'm watching a video, it's not on when I record. I have to remember that. So I'm just gonna keep the subtitles on. So I appreciate you reminding me in the chat. Enjoy.
So another big sell-off on Wall Street today. It was the worst one-day loss for the S&P 500 since June 2020. It fell 165 points, 4%. The Dow dropped 1,164 points, 3 6/10%. The Nasdaq lost 566 points, 4 7/10% today. And Wells Fargo's CEO says the worst is yet to come for Americans. He expects an economic recession. He says the recession, though, will only be mild, that consumer spending is still strong. Note those comments came before Target's weak earnings today. Federal Reserve is raising interest rates to fight inflation, but this could slow the economy into an economic downturn. So, Fed's chairman wants to navigate a, quote, soft landing as it raises rates, but recently admitted that won't be so easy. Wells Fargo isn't alone in thinking we're heading for a recession. Conference Board survey found a majority of CEOs feel the same way. It said, quote, CEO confidence weakened further in the second quarter as executives contended with rising prices and supply chain challenges. Target CEO today said it sees no...
Oh, did I mention? This is a commodities update. So we're going to go over gold, silver. We're going to go over the U.S. dollar currency index. We're going to go over some of the commodity stocks. And we're also going to go over the physical prices of silver and gold. Look at the relation to the U.S. dollar and yada, yada, yada. So this is going to be a nice update. Every single day now I want to do a gold and silver update. And I'm going to save it and categorize it into a commodities section so that it's easier to find within my updates. So hopefully every day I'll come with the commodities update.
...in sight for those rising prices. Now with us live is the founder of Euro Pacific Capital, Peter Schiff. Peter, thanks for coming on. When we talk about a recession in 2022 or 2023, what exactly are you expecting?
Well, first of all, I think the recession has already started. I think we're in it now. It's just early. In fact, the first...
If you guys want to finish watching this, we're going to go over the commodities right after we go through the intro. Then we're going to end with our friend, Peter Schiff. Good evening. I know you can barely see me because I'm outside, but it is dark as fuck out here. Good evening. 11:12 p.m. Eastern Standard Time. I'm XRP Future Millionaire, and I reside in the great dark state of Michigan. Oh yes, right out in front of the house. Got the traffic behind us. But what I wanted to do was come at you with a commodities update, and then we'll finish with Peter Schiff because I would like to bring more commodities updates. I love commodities, gold, silver, etc. Show you some of these mining stocks and oil stocks that can get you out ahead. And I'm going to do this once a day, I believe. I think it might come out, I don't know what time of the day. Maybe at night we'll do our daily in the dark commodities updates. Be with Tom in the dark to discuss your gold and silver. Because many people have never even seen what gold and silver looks like. So one day I'm going to have to show you some of my gold and silver bars. And coins or... not coin silver rounds or gold rounds. You want to buy the rounds, ladies and gentlemen. You want to get the cheapest spot price. So, first off, let's look at the price of gold. Ooh, some of my nice sell orders are coming through. I had to sell off some of my stuff that's up 300%. Only about 20% of what I hold of that one because another one came online for the Lobster Academy. So, had to switch it over. So, But I'm going to shut my face off because it's like glaring in my glasses and it's making it very, very difficult to see. So let's see. You guys see behind me? See what I can see? I mean, I'm not in Greece and I'm not in front of a beach and I won't even reach to show you a hotel or a beach. But guess what? I'm going to show you some good technical analysis. So we got the gold. We broke the rising channel and the ascending triangle. So it could be a little painful for gold here for a minute, but it's not all so bad because we're going to come down. We're going to do what we need to do, and we're going to retest these lower areas. Right now we have a bullish cup and handle on gold, so it's not that bad. We're bullish right now, and we can even come down all the way into this area. But right now it's very bullish. We're just retesting these areas, and in a 30-minute time frame, I think in the immediate short term, we can absolutely come down just a little bit. But as we raise rates and the U.S. dollar currency index starts to come down, gold's going to be very bullish. We held the support at 1,800, which is very critical. We had wicks down but didn't break. And now we've started a short-term uptrend. So this is what you're going to want to watch and see if we can break out of these areas or if we have further turmoil, which we could. We absolutely could because the U.S. investor doesn't really understand what's going on, so they throw their money away at every piss and moaning turn, and then they sell off their good assets like gold and the commodity stocks that they should be building into, and instead of buying gold and silver, they end up buying Bitcoin or some other shit, and then it goes away. Some shit coin, when you should be buying crypto, but you should be buying much more gold and silver to advance your portfolio. And then when you have gains in crypto, you should be becoming more what do you call it? Sorry, this car was driving real fucking fast and it's like, holy crap, it's dark out here. But you have to have a plan. You have to have a plan, and you have to be committed, and you also have to be you have to be very seasoned. Like, you have to be like a seasoned veteran when you're trading commodities, because they will really, they'll wreck you. Gold and silver will wreck you if you do it wrong. That's why people don't do it. They're afraid of it. Don't be afraid of it. Just understand what you're buying. So, silver, same thing as gold. We started this uptrend in the short term. And you can see the W reverse. So now it's going to be, can we continue this uptrend? And it's a very nice thing to see too, because we had a substantial down. And it was a pretty nice drop. And unlike Bitcoin and cryptos, silver and gold year over year were about even, as were Bitcoin, and pretty much all altcoins are 60% down from the start of the year. So that's what I mean. You preserve your wealth, and then as the US dollar drops, the DXY, you can build your positioning in gold and silver. And as inflation goes higher, the dollar, it's going to cost more dollars to buy that same gold and silver. The gold and silver never went up. It's still the same gold and silver that was worth $50 an ounce back, 7, 8, 9 decades ago. It's just that the US dollar continues to decrease in value. Even though it's inflated artificially right now, which we'll talk about now with the DXY, it's at 102, 103. Everybody's like, oh, I think we're going to come down now. Well, we got to break the 20-day and prove that this is the head and shoulders. We did break the rising channel, and that's a big thing. It's about fucking time. We didn't quite make it up to 106, but we did hit our first target of 102.940, and we made a run at 106, and we came up just shy. Actually, let me see. I'll show you guys a little sneak peek real quick. I had to sell a couple things that I'm only up to 880 now. God, I'm trying to get up to 1,000, and I'm gonna buy my next asset. I know you guys seen last week I was at like 5,700. Now it's up to 73. A lot of my stuff still doesn't come online, but like Gold Note IT's up 300% now. 200% today. I'm up on that. Gold Note DE, I'm up 100% today. Indus China, we're down 0.5% today. That had a nice little move yesterday. So a couple of these are up a couple 100%. I still need 120 XLM worth to sell out of some of these. And they will. Let's go to the so right now I've had 110, 50, 50. So these are at 200%. I'm having these sell out just so I can get to 1,000 on the Indus Swiss. and the Gold Tech UK at 200%. So, or 100%, I mean. So those were good. Very small percentages, like 20% are getting sold out there until I get out to 1,000 XLM, because then I have to buy the newest one that came on, and that's Indus X France. And that'll come on at 6 zeros and a 1, and I feel like I'm cheating. I feel like I'm in a casino. I don't have to put any more money in. I haven't since about $2,500. And it's like a revolving fucking door. Literally, if I need money, I'll take some out. Hopefully they're up like 800 or 900%, but in this case, I don't have anything that's up that high. And I don't want to take from Gold Node IT yet, because I already started taking out of some of the other ones, like the Swiss. The Swiss is down to 8.4 billion, but it started selling originally at 3, and now it's only selling it at 2. So the first like 200 was at 200%. Now the last 400 or 500 here have been at 100%. So you do what you got to do to get what you need, but that's what I'm doing over there. So as you can see, crypto market getting hammered. Tom's Lobster assets prices continue to go up. Continue to go up. Whoops. I don't want to click on that. That was one of my friends. She creates stuff, and she actually did something really cool, which I might share at a future time, but I can't show her stuff right now because that's personal. So, okay. I would have to get her consent. So, this is what we're looking at here on the 20-day. On the 30-minute time frame with the DXY, we've hit the support at 102.940 again, coming down, which means we could back test up here. I wouldn't be surprised for us to back test. The moment it breaks through here, though, this is a head and shoulders top in reversal. And we broke the ascending triangle, which once we broke that, we knew it was going to be a big problem. Ooh, another one sold. All right. We're getting closer, guys. That didn't seem like a very big one in comparison to what I need, though. 1, 2, 3, 4, 5, 6, 7, 8. Not bad. So that's what we're looking at with the DXY, and if this continues to break, you can see the descending pattern that broke out of the rising channel, which is very common. Very common. And you can see we could do it like that, but I don't know. I think we should do it like this. Prove that we understand the pattern. Because this is the very short term. That's a very short term thing that's going on here. Now, we could come up if we break out of this. And this is already showing us. If we break out of this short term pattern and back test, we'll come up and retest maybe way up there. So there's a chance we could come up and retest. But this could also break down and start playing out like this. So pay attention to that. The DXY, gold, and silver are working kind of opposite angles here. You've got crude oil, and then tomorrow we're going to go deeper into the commodities updates if you guys want to. I'm going to do it regardless, but we're going to go over the independent companies tomorrow. Right now it's just about getting us on the right tracks with the DXY, crude oil, gold, and silver. So crude oil, you can see the head and shoulders top in reversal. We busted this pattern finally on the way up. It took a while, but we fell outside of the rising channel, and now we've been back testing it for a little while. And you can see how perfectly this chart was drawn out. And now we keep getting rejected by the uptrending support as resistance, and eventually that's going to give out if it can't break back in it. And then, as you can see, that's sideways. That's going to come all the way back down to here if crude oil were to break, but I don't think that's what's going on. I don't think that's what's going on by a long shot. I know we're going to have a correction at some point, but as long as we're holding the weekly, it's still looking good, and we have a weekly engulfing candle to the top. And I kind of want to redraw this out a little bit from a longer time frame. First, we're going to come here because it's played out absolutely spectacular, but now what I've drawn out is basically played out. It's exhausted itself. It's not completely exhausted because the pattern's still playing true, as you could see. But now we can update this based on more things that we're seeing on the pattern. And yeah, this is going to be a much longer update than I expected. But when I get into commodities, man, do I love commodities. And I'll be honest, guys, I love doing what I do. So I have a passion to be here all day and all night. And I know I just did a live on Twitch that I shared with you guys, but I can't help it. I'm full of knowledge, and I want you guys to understand what I understand. So that's what we're looking at. We're just going to focus on the immediate short term with crude oil. So that's what we're stuck in. If we break down $94 or break over $145, that's the region. That's our range right now. Within our... Whoops. Actually, it is not, because I fucked that up. I knew that sounded high. So we're ranging right now. So if we can break up here, it's $135. But if we break past here and break this old high, look out. So that's what we're looking at here. But we also have to remember in the weekly, we're in a decided. We broke this out, right? We broke this. And now have we back tested it, though? We have not. And that's what I always like to draw a caution to. There's a chance that before we can come up any higher, we have to back test this all the way at 67, and then we can continue, make a handle here, and then go higher. So that's always a possibility of what's going on. XRP Future Millionaire, hit that motherfucking like button. Let's finish off with Peter Schiff.
Just early. In fact, the first quarter was already a negative print. And I don't think it's going to be a mild recession. I think this recession is going to be worse than the Great Recession that started following the 2008 financial crisis. So, and remember, the government didn't see that one coming either. And in fact, when we were 6 or 7 months into that recession, the Federal Reserve and other economists still claimed that there was no recession anywhere in sight. So this recession is going to be much worse than that one. And what's going to make it particularly problematic is inflation, because inflation is actually going to be exacerbated by the recession. So Americans are going to have the worst of both worlds. A worse recession than the Great Recession of '08, but worse inflation than anything we experienced during the 1970s.
So let's take it part by part, Peter. So first of all, we hear the banks are well capitalized this time. They're stronger this time. How could it be a worse recession than 2008?
Well, that's what they said last time, right before the financial crisis. They said the banks were in great shape. Look, the banks are only in good shape until the value of their collateral collapses and people can't repay their loans. That's what happened in the last financial crisis. This one is going to be even bigger because the economy has a lot more debt now than it had in 2008. And Americans are less able to pay it when interest rates rise because the balances are much greater. So we're in much worse shape as a result of all the bailouts and all the stimulus that papered over the last crisis. And so now the one we're dealing with is going to be much worse because we kicked the can down the road instead of solving the problems when we had a chance.
Is there a remedy, or is the damage already done?
Well, there's a remedy, but it's not without pain. And unfortunately, it's the middle class and the poor that are going to feel the pain the most. Because if the Fed fights inflation, it's middle class and poor people who are going to suffer the most during the inflation fight. If they don't fight inflation because they think they want to spare the middle class the pain of a horrible recession, well, then they're going to suffer even more with massive inflation.
I want to note for the viewers as well, Peter, before the 2008 crisis, you were one of the only ones who did predict it and were warning people at the time, just to give some context. Let's look at the stock market today. How much further can stocks drop by your calculation?
Well, they can drop a lot farther, and they will drop a lot farther until the Fed does an about-face and acknowledges how weak the economy is. See, the Fed is only pretending it's going to fight inflation because it's also pretending that the economy is strong enough to withstand the fight. It's not. Even though the fight is inadequate to solve the inflation problem, it's going to cause a big problem for the economy that is so levered up on debt. And in fact, you talked about the Target earnings. Earnings are collapsing because Target customers are spending all their money on food. And Target doesn't make big profits selling food. It makes profits selling other goods that Americans are now too poor to afford. And so the bad news is now Target has to really raise prices even more, especially for food.
The inflation problem, if you look at businesses and earnings, they performed well last year, right, with the stimulus, etc. It looks like they're getting completely burned at both ends between rising costs and then demand destruction as people can't afford to pay for the stuff, like you said.
Exactly. And, when you have people like Elizabeth Warren claiming that the businesses are gouging the customers, they're not. They're actually not raising prices enough. They have to raise prices more because the businesses have been taking a hit in their margins And yes, they're going to have to prepare for reduced sales at higher prices because customers don't have the money, and that's when the layoffs begin. See, that's the problem. As companies have to downsize because their customers can't afford their products, those businesses can't afford their workers. And so we're going to get rising inflation and surging unemployment at the same time.